Monday, April 28th. Let's level up. Month coming to an end. We have a lot on our plate this week. Tuesday, we have consumer confidence. Wednesday is ADP, GDP, and the PCE number. That, of course, is the Fed's inflation gauge of choice. Very key. And we could actually use the Tuesday range as a pass, don't pass line. Above is bullish, inside neutral, below bearish. Thursday, we have claims, ISM manufacturing, and then we go to a jobs number. So then we could switch to the jobs day range, meaning Friday's day range. Above is bullish, inside is neutral, below is more bearish. Going up into that, we have some stuff to discuss. I think the bears really need to get over 26.93, which was the two-day high. Once we broke the 29.57 down to 28.32 area, we came into the 24.80 to 23.76 level. So far, we've been holding on the higher end of that range. That zone needs to break to see 21.51, which would be the 4-2 gap fill, and then we'd see. If we are able to clear the 27.20 area, we'll probably retest that 28.32 up to 29.57, and then we'd see if that clears the 20 MA and channel higher 32.23, and we may trade up to that if we get some bad news. As far as the ES and the NQ, for still higher prices, bulls need to hold 55, 59, 75 plus. To stay neutral to bullish, they need to hold 55, 33, 75. Anything below that, to me, has liquidation break potential to 54.81. Q, similar situation there. Short term, they need to hold 19,554 quarter and clear 19,623. Anything below that, I think, can retest the 19,372 half, which is a very key pass, don't pass line. Above there still keeps things nice. Below there, we could see a larger liquidation break. As far as SPY goes, we probe below our key levels of 547.52 to 549.68. Anything above there should fill the 4-2 gap up to 564.52. 50 MA is a little below there at 560.91, so probably a good level to trim into, and then out of more at the gap fill. The end range has been the 200 MA, which is currently 573.08, so if you want to do some kind of a call spread, anything above 573 is a good upper strike. On the downside, if we were to lose today's low of day at 545.02 and then take out 544.28, I think we're cruising straight down to the 20 MA at 534.42 and maybe even filling the 422 gap to 527.25, and then we would reevaluate at that level. If you are doing some kind of a downside put spread, targeting that 527 gap fill makes a lot of sense to me. As far as the Qs go, held in at the 466.43, which is our key neckline. Anything above 471.60, which is the 50% fib, should get us up to the 50 MA at 478.87. The 4-2 gap fill is right there at 476.15. So between that 476.15 and 478.87, or wherever the 50 MA is, good area to trim. If we do the same with the 61.8, getting the 200 MA resistance, meaning the next levels on the upside, 487.93 to 491.32. You want to target that 200 MA with an upper strike close to 491. Let's just say sell 500s. I'm good with that. If it doesn't work out right away, you could always roll down that upper strike, and this is a little bit longer dated because I don't think we're just going to sail right up there without some news. I think if we got some tariff deals or if we get some good earnings on that Amazon and Apple, that could propel us up to that resistance and then probably gets a sell-off. Keep an eye on this ISRG. I'm actually very bullish on the business. It is into some resistance here at 517.04 and the 50 MA confluence at 514.01. There is some room up to 529.19 to 538.76, but I do think pullbacks to the 489, 490-ish level now are buyable. I think ISRG, which is of course the Da Vinci method for robotic surgery, is going to be the next AI play in the next 5 to 10 years, maybe even sooner. I think they already are doing some of these type of surgeries with other companies, but instead of doctors manipulating and operating these machines, it's going to be AI. And you'll have more reliable surgeries, more frequent surgeries, faster surgeries, and less mistakes. So this will probably be very popular with the insurance. As far as Apple goes, I am a little worried if it keeps rallying into the numbers. The bulls there need to hold the 208.42 down to 203.93. Anything below there to me gets a little vulnerable. I do see the next resistance zone between 214.66 and 219.38, and it maybe gets the 223.89 gap fill. That, to me, would be a good opportunity to exit. That's, of course, the 4-2 gap fill. I would have some orders peppered out there if you're long the stock into earnings, because it could be a pop and flop, but I do think that that zone is a good area to target on the upside if we do see some poppage. I am expecting Apple to do a big buyback and a dividend increase similar to what Google did. Speaking of Google, the earnings pop didn't really hold, but it isn't really dumping too hard either. We did fill in the gap. I think the 20 MA is probably a buy the dip at 154.07. You can keep trailing down if you're short to prior day's highs, or put buy stops for longs over prior day highs, because we're auctioning on one time framing to the downside now. Once that ends, I do think the upward auction does resume. And I would be targeting the 200 MA at 172.14. As you can see, these 200 MAs are big upside targets across the board. Netflix reported they were pretty bullish, still strong. I see there being resistance at the channel high here at 1129.26. Probably a good area to have some sell orders up there. I'd be careful below today's low of 1082.62, and anything below 1064.50 probably signals a short-term to medium-term top. Nvidia seemingly having more competition. 20 MA is key there at 105.27. I do ultimately think that this will have resistance between 112.03 to 115.10, which the 50 MA is right in there. If you want to do some kind of a call spread, 125-ish is a good upside target. That's just above the 200 MA and right at the downtrend line. Gold dips continue to be bought, but it hasn't been able to get over the 2.618 at 316.65. I still do think there is some potential risk down to the 281.68, which is the 2 times range, and 50 MA confluence. Generally speaking, though, I think you could now raise stops to low of day at 302.97. I don't really see there being a ton of sellers unless it can't hold the 300-ish area. I still like rotating some money into Bitcoin, as that has lagged, and of course digital gold tends to be the new real gold. I see there, like I had said, being resistance between 95,705 to 96,591, basically the 61.8 area. We're teetering just below there. If it can't clear, we can retest the 50% fib at 92,403, but I do ultimately think we make another run at 100K, at least at some point. Generally speaking, we are nearing some short-term resistance, particularly the closer we get to these 4-2 gap fills. I do think that that area is to book some profits into. 50 MA and 200 MA are upside targets. I would trim accordingly, never assume end ranges, and we don't always have to be in the full trade all the time. It is healthy to take profits along the way, particularly in this tape. IV is getting cheaper. It isn't super cheap just yet, but if we do get another pop up into the 30s or even 40s, I like the opportunity to sell some out of the money premium again. As we come down in volatility, particularly if we get close to the lower 20s or even higher teens, good opportunity to buy back pretty much everything that was sold, and maybe even look for a reversal. I do think the 4-2 gap fills could be in play if we do get some positive news, but I think it's a good opportunity to book some gains, and I think the market is going to struggle mightily to get back up over those 200 MAs, at least if we're coming up from the bottom and without some consolidation. Like and follow for more.